Sachin Tikekar, who is the President and Joint Managing Director of KPIT, spoke to us about the quarter gone by and the outlook ahead. The most important point about KPIT is that they have said that quarter 3 and quarter 4, the performance may be slightly subpar. The question only is whether that can change after FY25 is over. So that is the key point that people will be watching out for. Listen into a slice of that conversation.
I think this is a great conversation, Neeraj. And we see the automotive industry had a bumper year last year. I think 2023 was a great year, and there were signs of slowdown. I think there were a whole bunch of pressures on the industry. One, the whole socio-political thing coupled by the macroeconomics playing out in some of the countries, and pressure from the Chinese car makers on the OEMs, especially the European ones. I think it was being felt. It's just that the OEMs were still producing cars and making money last year. And I think from the beginning of this year, there is a realization that things have to change. And many OEMs are trying to figure out what this change means to them, hence what kind of strategies they need to adopt in terms of, the consumer preferences, the markets that they want to target, and so forth. I think that's where we believe that, and now in the last quarter was the first quarter when there were some unpleasant surprises in terms of the OEMs announcing results that were not so favorable. And I think this quarter is going to be a mixed bag too, and it may continue for another quarter or so till the time they are able to sort of make the adjustments and make sure that they are all set from the mid to long-term perspective. So in all of this, what it means is some are taking a pause to revisit their priorities, and some are going forward. So let me just give you a color in the sense that how we read the OEM behavior in different countries. In the US, because there is a 100% import duty on the Chinese vehicles, the US OEMs are doing all right. They know they are under pressure, but you see GM announcing fantastic results yesterday, and the forward guidance is also pretty solid. Tesla is looking okay too. So the US OEMs are okay because they are sort of protected in the immediate future. So they will continue to make their investments. The most impacted are the European ones, especially the ones in France and Germany, where they are feeling the pressure. They had large chunk of their business coming from China, and they're also facing competition from China in some of their markets. So, we've heard news about Stellantis and Volkswagen Group about trying to take a step back and figure out what kind of investments they want to make and in which markets. That's what we are going through at this point in time. And there is sort of, from KPIT's perspective, sorry.
No, please continue.
So from KPIT's perspective, I think we continue to see closure of large engagements, and we continue to have meaningful conversations of some long-term engagements. It's just that given their strategic priorities, some of these decisions are being pushed back a little bit. And that kind of, we thought that it's always prudent to sort of let everybody know that this is the reality. Having said that, the conversations are good, the pipeline is great. So to us, it's just a matter of time before things start to really pick up from KPIT perspective.
Is it, Sachin, Sachin, is that predictable, if you will? I'm guessing it is not, but the point I'm trying to get to is that do you reckon this quote unquote, for lack of a better word, pain or uncertainty, could this last for a couple of quarters? Could it last for longer, or is it difficult to predict that right now?
Our guess is, Neeraj, the OEMs will have to make decisions very soon. They cannot sit on some of these critical decisions. So our guess is it's a matter of 1 to 2 quarters.
Okay.
I think, and we hope that in January onwards, I think there'll be a lot more action, and the momentum will really gather from April of 25. That's what we expect.
Right. Okay. Thank you so much. This is Rucha joining in. You mentioned in the conference call last evening, actually, that US will now be a good opportunity for you because, US OEMs have largely banned the Chinese software makers. So what kind of growth do you expect in this vertical? And do you expect the growth to be driven by this vertical in the second half, or still there's some time to go for this one to revive?
Rucha, we feel that the growth, if you look at our growth in last 2 quarters, primarily has been driven by Asia. And we think that the growth going forward would be a little more balanced. And I'll talk specifically about the US. US, we think that the growth will come from two areas. One is the passenger cars, because the software has been banned. Fortunately, GM and Ford for now are reporting healthy profits and growth. So we believe that the growth will come from the OEMs who are in the US from PASCAR. We started to make investments also in the off-highway, especially in the agriculture and construction vehicle sectors a few quarters ago. And there are some meaningful conversations. And then there are a couple of fairly large players in the US. And we believe that in the midterm, those engagements will also get initiated, and that will actually help our growth in the US.
So US moderate growth is what you are expecting, and what about Europe? You call out that certain OEMs are still struggling. So will that affect the company's performance?
It will not affect the company's performance. So let me reiterate that we are sticking to our guidance, and we remain bullish for the midterm, including the next financial year. It's to us from the European OEMs, specifically the ones from Germany. We believe there are really meaningful conversations that are going on, and we believe it's a matter of another 1 or 2 quarters before we see longer term sort of engagement coming from the European. And there are two parts in Europe as well: the passenger car OEMs across Germany, France, and Sweden. I think we'll see growth coming from all three. And we have also started really good conversations with some of the truck makers there, the commercial vehicle companies. So we believe that these two sub verticals will bring back sort of more vibrant growth in Europe, both pass cars and commercial vehicles.
Okay, and which I think reflected in your comment that your investments in trucks and off-highway sub-verticals are expanding market opportunities. Okay, so Sachin, yeah. Just to dispel, one of the notions this morning, and at least from my end, the last point on this growth piece, because it becomes important, that the belief is that the delays in deal ramp-ups or deal closures, what have you, will result in a softer second half, which is now evident if you do 18%, of course, but the weak exit rate impacts FY26 growth. Do you think that's a misnomer? FY26 is still out in the open for a strong year as things stand?
I would say so. Because right now it's looking pretty solid. The pipeline is looking good. The conversations are really good. And we also believe that the OEMs have to make some of these important decisions. And I think they are looking to consolidate things, and they are looking for a partner to take up, larger chunks of business. So, we remain fairly optimistic about FY26, Neeraj.